Hey everyone, I was just working that out with Sergio. Let me just get the screen set up. No, I just went through this with everyone. I'm going to do it again. I had a miscommunication with Rory and gave gave at least a 1 hour talk. Now we made $382 today in the trading room. And as part of what I do, I'm going to show you the entries I took. And what we're going to do is we're going to define fairly rigorously the criteria we need for all of our different trades. And I already typed them out. And we're going to send them out on a PDF. So let's define first. I can show you real quickly the trades I took today. I took a couple of real stinker trades. And we had unbelievable winners, just killer winners. But I'm going to show you those as part of this. So let's take the simplest trade, and that's a continuation trade. We simply want to pick up a trend that's already in progress. Actually, I'm sorry, it's not the continuation. We're going to take the new trend at the start of a new trend. Now, here's what I'm going to show you lots of examples of these trades. You must have an oscillator signal, and I'm going to show you that. The candle body is very helpful if it's 3 or less ticks off the 50. Background bias is very helpful, but not absolute. The dots, and I'm going to explain what those are very helpful. The color of it's a very simple setup. The color of the 50, which I first thought was important, is not important. It's not a major independent variable. Now, the intermediate quant, which is the middle quant, must be in your favor, and the major and minor must be at least yellow. If you got them on top of it, it's cake. But you've got to have the intermediate. You must have the 3 line, and you cannot be overbought or oversold. And that's 6 points to the upside or 6 points to the downside. And right now, the market is in the process of collapsing. So let's take a look at the trades, and we'll look at some of the trades that I took. So let's go to today. And we had some great trades today on the E-mini. Now here, I took this trade. This is more of a continuation. Here's the trick. Here is a perfect trade off the 50. Now, this is the beginning of a trend. You may want to consider the trend starting here, but once you break the 50, here's the configuration. It's the move down, the retracement to the 50, and the continuation. There's only 2 types of trades. And the other type of trade is simply the move down, touch of the 50, and the short. So those are not the continuation trades, but you're entering off of the 50. And optimally, here's the things you must have before you can take a trade. You must have the oscillator signal. It's a must. You must have this intermediate quant, which is an indication of money flow. You must have the 3 line in your favor. And if you do, you're going to see the candle outlined in pink. If you have background bias, which is a multi-time frame assessment of the E-mini, it just tells you this is more likely to be a winner because you're taking a trend trade, not only in the direction of your chart, but of the two higher time frames. Now the dots are the multi-time frame assessment of the NASDAQ and the Russell. So that when you take a trade off the 50 with the dots, and you know that the Russell and the NASDAQ, I'm sorry, the Russell and the NASDAQ are also heading down, this is almost a gimme trade. And you can see I took the trade and it went 4.75 points. Just a gimme, it's a gimme trade. Now your candle body is a little more than 3 ticks off, but you have so much else working for you that you can give it that space. It's 4 ticks off. So it's not a problem. You're just giving it one more tick. That's your perfect continuation. Now here is a much riskier continuation. You're way off with the candle body. You don't have the dot, which is not absolutely necessary. You've got the 3 line, and you've got dual quants, the major and the minor. So you have the icing and you have the cake. So this is much more of a discretionary trade, but if you wanted to step aside on this trade, not a problem. This is not a gimme trade. This one comes with moderate risk, while this one comes with almost no risk. So if you want to trade 10 contracts, you trade it here. If you want to trade 2 or 3 contracts, you trade that here. So let's take another perfect continuation trade. Right here. You've got your mandatory intermediate quant, your icing on the cake major quant. You've got your background bias telling you this is a little weaker trend, but the E-mini on the 2 higher time frames is set up for a short, so you're taking a real mega trend trade in the direction of 3 time frames. You've got the oscillator signal. You've got the 3 line. A little bit more icing would be the dots. But once you see them start to kick in after you're into the trade, you know you've got yourself a nice long move. And that's a 5.5 point trade. That comes with very little risk. Now here's another trade. It's a little bit discretionary because you're just touching the 50 with the wick. You've pulled off the 50. You don't have background bias, but it's right around the corner. So you know that you're trading in the right direction. You just haven't locked in a multi-time frame downtrend, but you've got the NASDAQ and the Russell in a multi-time frame downtrend with the dot. That's the darkest color. There's the lightest color. There's the intermediate, and there's the darkest. That darkest color on an entry candle down is a very, very good sign to take a short trade. So this comes with there's no zero risk, but this does not come with as little risk as possible. It comes with some risk, but risk is minimal. Now here's another trade. Now on the trade, you don't have the intermediate quant. The quant is yellow. So you can't take this trade, even though it's a winner. This is going to give you, our first target's a point, and our second target is 3 points. And this is going to give you a 1.25 points. So it's a winner. Now here, you've got a trade, And I would have to see. I'm not going to alibi because I think this trade. I'm never going to tell you that every trade's going to work, and this trade does not. Except I don't think that you're trading in the right direction. The 50's heading up, and that's okay, but you're sandwiched in between two areas of deep green. So you have to be very, very careful that you're always trading at least in the direction of the higher time frames, and I don't think you are, because when you get this reverse signal here with the 3 line and the oscillator signal, you haven't broken the 50, so you can't take the trade. But you've got a gigantic move to the upside, and I think your bias here was long, and you would not want to take a short trade. And if I see a loser, I'm going to tell you, there's another great setup. Now, you're trading against the direction of the multi-time frame trend, but this is a weak uptrend. You've got the dot, you've got the oscillator signal, and down you go. And it's not a must to trade in this direction. I wouldn't trade against this. I'm sorry, against this dark green. And I know you have to learn, and I'm going to show you all that. This is a very powerful multi-time frame uptrend. This is a very powerful multi-time frame downtrend. This is a moderate multi-time frame downtrend. And the weakest is this color. So let's look at one more. Again, I cannot take that trade. It's a gigantic winner, but you're too far off the 50 and you don't have the dots. So we're going to go back. Now here's a nice trade. You've got the oscillator, you've got the dot. Now you don't have background bias, but you've got the intermediate quant. You've got everything in your direction, and you get a great long trade. This is a different kind of trade. Now you're going to see we don't get many that lose, and I'm not going to call that a trade. I'm not skipping any losers, believe me. And this is a long trade right here. But I'm going to let this trade go and say we wouldn't take it. The problem is I've closed the platform, reopened it, recalibrated it, and it changes the color of the background bias and the candle outline. This is a long trade configuration. I'm pretty sure you had the intermediate quant with the trade, and I'm pretty sure this is a great long trade. Here's another one. The problem is we have the quants recalibrated because of that multi-time frame analysis. And I want you to see something that's really important. The 3 line turns first. The 3 line turns first. So when you get a green 3 line on a down candle, your next candle is a very likely winner. Here's the 3 line turning to the upside on a down candle, and up you go. So let's take a look at a new trend. Oscillator signal is a must. 3 ticks off the 50 with the candle body, very helpful, but not absolute. Background bias in your direction, very helpful, but not absolute. The dots, extremely helpful, but not absolute. The color of the 50 is not a major independent variable. You don't have to have the color of the 50 in your direction. Intermediate quant in your favor with the minor and the major not against you. a must. The 3 line, a must. Cannot be overbought, which is 6 points. Cannot be overbought or oversold, and that's 6 points. And if you adhere to this, you're likely going to get great trades. Now, I want to say that the background bias in your direction is very helpful, but if you want to take the lowest risk trades, you're going to have it. Being 3 ticks off the 50 is not mandatory, but if you only want to take the lowest risk trades, that's what you're going to do. The intermediate quant has got to be with you. The 3 line's got to be with you, and you cannot be overbought or oversold. So where you have discretion is on the amount of space you have from the candle body off the 50, either up above it for a long or off it to the downside for a short, whether or not you have the dots showing you the multi-time frame direction of the NASDAQ and the Russell. They're very helpful. And background bias is extremely helpful. But I don't want to say it's a must, because you can get some really good trades if you have the dots and you have the oscillator signal and you have the intermediate quant. So there is no platform that works correctly that gives you some dummy entry. All that a platform can do is assess risk for you on a trade. And it would be helpful if I went over all the trades I took today, and you're going to see that all the low risk trades I took worked. I took a couple of really lousy trades, and they cost us money. I only had one trade that was a good trade that failed. So to me, to make almost $400 on a day where I took 2 pretty miserable trades is really good. Now let's go over my trading for today on the E-mini Renko. I just want to make sure I took the trades because I have so many lines here now, but I remember what I took. And I'll show you the first bad trade I took right here at 9:32. Let me take this off. What I did was I took this reversal. And we haven't even discussed reversals yet, but you can't take the reversal with a green dot because you have the NASDAQ and the Russell moving up. So you see the wick? It took us right out of the trade. So what I did was I went right back in and I got a winner. I was lucky. And sometimes you make money on a bad trade. It went 2 points, it went 11 ticks. That's my first trade. But on this exchange, I lost money. That was my first trade. I'm trying to remember. I took the second trade. This is a counter trend trade with an oscillator signal. I made 2.5 points. I missed this short. I took this long trade. I made 3 points. I took this long trade. I made 5 points. And I took this long trade and I made 5.5 points. I took this one, I made 6.25 points. And that was the end. And that took care of all the losers. And then we were done. And I'll show you my losers. There was one right here. On this reversal, which is a terrible trade. And we're going to talk about reversals. And I took another really god-awful trade. And I'll show it to you. Let me find it. The trade was so bad that I swear I stunk up the entire trading room with it. And let me find it. It was just an extremely poor trade. And there was no way that was going to make any money. And I'm just trying to find it. I don't know if I can find it anymore. Trust me, I took a really, really bad trade. It would make you wince if you saw it. And then I had a great trade that lost. And I had another loser on crude. So hang on a second here. These are the last 2 days of trading. Yesterday we made $1,100 and we had no losers. And these are my losers from today. And we've got all those winners. And the summary is 1,482. Now, let me just go over. So let me just, again, reinforce the trend trade. Or I should say, in this particular case, the new trend trade. And if you have any questions, just put them in. I'm going to answer them all. So I want to find a perfect trade for you. That's, again, this is, a tradable trade. You'll see again, the 3-line turns first. If you've ever seen a leading indicator before, there's your leading indicator. On an up candle, the 3-line turns down. Here is your entry. You don't have a dot. And for me, it's a little far, but you've got the background bias telling you you're trading in the multi-time frame direction of the E-mini, which is down. So it's a discretionary trade. You've got your mandatory. You've got the intermediate quant. It's what you see right to the left. You've got your 3-line. You've got your oscillator signal, which is a must. You've just pulled a little bit off. You've got some cake here because you've got your background bias to the downside. And if you took the trade, you got yourself a full winner. A beautiful, beautiful short trade. Now, here, you can't take that trade. You don't have the intermediate quant, which is an absolute necessity. Again, maybe we had it before we recalibrated the fractal indicators, but we don't here. Here, you don't have it. Here, you don't have it. You have to have it even with the dots. Here is your trade, right here. And this is a gimme trade. This is where you can see you're just about to get down bias. 3-line calls the trade first. It's turned red already on an up candle. You've got the dot. It's a weak dot. It's the lightest dot. But you've got the multi-time frame NASDAQ and Russell heading down. You see how the dot gets darker as the trade matures? You've got the intermediate. You've got the minor. And you've got a great trade right here. Here, you have a potential trade. In fact, this is a trade. Because you've got the dot, I would give it the space, and you've got yourself another winner. You've got the call first by the 3-line. Now, this is a different kind of trade we'll talk about in a minute. This is not a trade. There's no intermediate quant. Now, this is a short trade. You don't have the background bias. This is a riskier trade because you see what you have here. You don't get any multi-time frame alignment to the downside till you get all the way here. It's not mandatory. It's just a plus. But you've got the intermediate. You've got the whole 3 line, candles outlined. You've got the multi-time frame assessment of the Russell and the NASDAQ. Remember, this is the multi-time frame assessment of the E-mini. This is the multi-time frame assessment of the NASDAQ and the Russell. The NASDAQ and the Russell pull this market down, or vice versa. I don't know which leads which. And the more that I watch these markets, the more I don't think any market leads any other. They kind of tend to move in the same general direction, which is essential, but for our trading. But sometimes they diverge. But that's your perfect trade right there. And you'd be hard pressed to find that perfect trade losing. Can't take this long for sure on those pink dots. Can't take that short on that green dot. There's your trade. Now, you don't have the 3 line there. I think you had it in real time. There's your long trade. There's a great long trade at 10:02, which I took for 5.5 points. So I think, and there's your short trade, which I took for 6.25 points. So I think you've got a pretty good idea of what you need to get for a new trade. And it's the move down, the move up, and then the continuation. Or we just didn't see him today, the move up and the roll back down into the direction optimally of the multi-time frame trend. The fact that everything on this platform is calibrated to assess, do a multi-time frame assessment is really what makes it so powerful. We want momentum, order flow, and stochastic to turn, and they turn first commonly. Then you get your setup signal. The oscillator crosses the cyan line, get the signal, and bam. And when I started trading it, we've only been trading it a week, and I wasn't so sure the oscillator signal was as essential as it was, but it is a mandatory component. So let's go to the other kind of trend trade, and that is the continuation trade. This is where you are already in a trend fairly far off of the 50, but there's so much information that's telling you the trade is going to continue on. And I'll show you what I mean. Now, the oscillator signal on this is going to be rare. You're rarely going to get the oscillator signal because the oscillator signal is already crossed up above, and hopefully you're in that trade already, and you get a reversal candle and it takes you out. Now, you're not overbought or oversold, which is 6 points. Background bias in your direction is a must. The dots are a must. The color of the 50 is not important. Intermediate quant is a must. And every trade we take, it's a must. The 3 line is a must. So 6 and 7 are a must on everything. But in this trade, you have to have the dots. You did not have to have that in the trade off the 50 at the start of the trend. So let's take a look at a really good continuation trade. It's right here. Let's ignore for a second the fact that the 3 line is telling you it's trading in the wrong direction. Because we recalibrated. Let me show you one where it is. It's a lot easier. It's right here. Now, if you look here, you get it up. Now, we're not taking a counter trend trade here. You can't take this signal short because there's no 3 line. And if you took it, I think you would have squeezed out a winner, maybe. But you just never enter a trade without the 3 line. You would have gotten a winner. Now here is your continuation, but you have to have a dot, and you don't have the dot, so you can't take this trade. Now, if you want to grab it here, it's just much greater associated risk. Like here's the trend has already started, and you're in here. This is a trade short. You've got everything you need, including the dot. Then what you get is a pullback, and you want to decide whether you're going to get more down. Having that dot on the first down candle is really, really a big deal. So let's find a trade that does have it. And here's a long trade. You can't get in at the beginning. It's here. It pulls back. Now, do you take the continuation? Now, you're certainly not overbought. You know you're going to be significantly off the 50. You've got the major quant and the intermediate quant. You've got the multi-time frame. This is an intermediate color. So it's a fairly powerful uptrend on the NASDAQ and the Russell. And you've got yourself a long trade. And this is a nice long trade. And this comports with all our rules. On the entry candle, you must have the dot, you must have the intermediate quant, and you must have the 3 line. And I'll tell you, you're going to find very few losers. What happens often, now that's a great trade to start. Unfortunately, when you get the pullback, you don't have the dot. And they often come a candle late. Now, if you want to jump on it, a candle late, you can, but just know that you're breaking the rules and you're accruing a additional significant risk. But if you want to do it, listen, there's nothing that you can't do. It's just a question of whether you want to assume the risk of missing 2 ticks on the entry. That could be a big deal. So I'm not going to tell you to do it. Let's find another one. You see here, no dot, no nothing. It keeps you out of trouble. Now, let's just make up that the 3 line is with you here. Here's your trade. Got the dots. It's tough because, like I said, the 3 line is not calibrated right. Here's your trade. And this is an enormous trade. Now, what in the heck was this? Now this is late after market closed, but here's your perfect entry. This is the kind of entry, I swear, if you could dial it up to a few 100,000 contracts, you take it on this trade. It's called early by the 3 line. Finally, the candle falls, which it is likely to do. You've got those dots. You've got the darkest color. The NASDAQ and the Russell are heading down, nice and strong. You've got the oscillator signal, and man, you're all over that trade. Then it comes back. You can't take it short. You don't have the dot. But then it comes back, and this is what it comes back enough to give you an oscillator signal and the dot on a continuation trade. And this pops only a 1-tick wick, and you got that whole move on very, very little risk with the intermediate quant. Now, when you get down this far, you still have the intermediate, but I don't think there's 6 points. Let me see, because remember, the 50's chasing price, and the 50's heading down really hard. So it'd have to be 24 ticks. It's 25 ticks. So I would be hard pressed. I don't want to give you an entry that I wouldn't take. This is 25 ticks. That's 7.25 points. It's actually more than that. It's overbought, and I would not take this trade. But you've got yourself two gigantic perfect entries. And if you wanted to take a little bit of a chase, you could have taken that trade. But there's your stellar continuation and your stellar continuation. And these don't repaint. So if price went up like that, you'd see it go up like that. I mean, once the dot and the triangle paint and they're on the chart, they don't go anywhere. So I don't want you to think that these are all great trades because, you know, it's just the way the indicators are doing it. It's just not that way. So let's find another one. Let's go backwards because I have the other side just painted so much. Now here we're right at the 50. And here it is. This is at 14. There's the move. And you know what? Here's the up close, but you don't have the dots. You have to chase it on the next candle. And that's up to you. You know, you're not going to get the oscillator signal. I believe you're going to have the 3 line, I think. But if you do have it, you're going to go in there. Now here you have everything. Let me find another one. You see this continuation trade short? You're not taking that one because the 3 line is blue. And the 3 line's heading up already. So this is a potential trade short, but it's been censored. And it looks to me like the dots are coming in late. I don't know if it's because of the recalibration or not. It may be, but they're popping in 1 candle late here. But this is a great continuation trade. And you have what you must have. It's called early. On the candle before it, you already have the oscillator. You already have the 3 line heading down on an up candle because of the higher time frames. You have an oscillator entry, which is icing on the cake and not absolutely required. You have the 3 line. You have the intermediate quant. You like that dot. If you want to go 1 more candle, you can, but just be careful. And we'll just go through here. There's no trade here. There's your long trade with the dot and the oscillator signal. And right here, it's a beautiful long trade. Here, you do have a continuation trade, and it works. That's absolutely 4 ticks. I think it's more. It's just a point. That's okay. We'll take a little winner. You have no trade here. So I want to show you the system into chop. Here's your short. Here's your long. Here's your continuation. Now this is a red 3 line. Whoops. Let me just see here. This is not a tradable setup, and I'll tell you why. Hold on 1 second. My son is just texting me, and I just got to answer him. He's home for the spring break, and I just want to let him know that. I just want to let him know. I'm sorry. Oh, okay. There is your great continuation trade right here. Now, if you wait for everything and you also have your best background bias, this is, I mean, listen, I'm never going to tell you it's a guaranteed winner. This is a very low risk trade. This dark green is the strongest uptrend for the NASDAQ and the Russell. It's also the strongest uptrend for the multi-time frame assessment of the E-mini. When you got that, and you've got the major quant, I mean, it's time to load up the truck. And that's a terrific trade. Now we're in a ton of chop. We don't have any trade here. Here's a trade, and I think I took it because I have it scaled, and it went 1.5 points. So it was a winner. I have a few of them scaled here. I don't know. Now, this is not a tradable setup because it's a green 3 line. Here's the red, and that's 1.25 points. So I'm not really sure here whether I was just marking it up or what. I'm going back so many days. There's another one right here. Your continuation perfect. This one, candle late, and it may be oversold. Eventually, or very soon, we're going to have the MA diff, which is set up for range. We're going to have it set to read how many ticks you're off the 50. So you won't have to scale it or estimate. This is a quarter point too much. So without the dot, I think it's a little bit much to trade. This I would not trade on green background bias short. I'd be a little bit scared to do that. I also got the green dot. It worked, but it's just a little bit too scary. I don't have the intermediate quant. We're going to get moves that we just can't get into. This is not a long trade. You're trading right into the 50. But we're looking for continuation trades. You must have a dot. It worked, but you must have a dot on a continuation. Here's a trade right here, and that's definitely a winner. Not a huge winner, but it makes it. Here's another continuation trade. This is a real nice one, actually. It's 3.5 points. That's a nice point. And look at that. Look at that long trade. Now, the way it's calibrated here, we don't have the intermediate quant. So I can't tell you for sure that that's a perfect long trade since that intermediate must be there. But look at that thing. I mean, I think you're going to have it. We didn't have to recalibrate this system. Here, you've got it. And up you go. Like I said, nothing's repainting. If this system completely crapped out, you would see every single bad entry. Now, maximum excursion is 5.25. You're not going to get the maximum because you're on a trailer, and I don't want to mislead anyone. All I'm doing is giving you the maximum excursion. And here's another trade. And this is with the oscillator, which you don't expect to get on a continuation trade. But you've got the dots, you've got the best background bias. Have faith in the fact that you're trading into a multi-time frame trend of both the E-mini, the NASDAQ, and the Russell. And it's going to carry you up. Here's another continuation. Now, I'm positive you had the intermediate quant on this move. And you have a very light dot. So it's not a strong E-mini Russell trend. But boy, it's enough on this trade. Right here. And up you go. Now, like I said, if the trade didn't work, you'd have the dot and the thing, and you'd have price go like that. And you'd just see it standing out there like that, looking foolish. So now here's another one. I mean, it's just ridiculous. There's another one. Now, again, you don't have the recalibrated intermediate, but I think that's an issue with the platform. Here's another great trade. Now let's look right here and chop and see if we get a bad trade. Now here's a continuation on a red 3 line. And there's no question, all 3 of these lines are red. There's no trade here short because you've got a green dot censoring the trade. You're going to see what we do on counter trend trades. You can never counter trend trade this dot. Then you get the oscillator. It's a continuation trade because the trade is just simply, and once you get more faith in the system, you're going to see how well it works. You're getting your pullback, and it can be a little bit of a complex pullback. And then you get your continuation with the whole shaboodle here. You have the intermediate, you have the major, you have the 3-line, you have your Russell and NASDAQ, and you can see being the brackets that you're looking for a long trade. You don't have that exact setup, but this is definitely an entry. And I won't bother scale. And I mean, there's another one. So I think we've beaten. And look at that short trade, man alive. Now I took this for 4.5, and it took me out. See this wick? If we get a 3-tick wick, it takes us out of the trade. So we got 4.5 points on this entry. What a continuation trade this was. Now, what I should have done is I should have gone right back into the trade on that candle. The candle that took us out, go right back in on, which I'm starting to learn. I took this trade, and it took us out. I don't know. It went all the way. It went 4.25, and we were out of the trade. 4 points is our second target. It continued to go down. We closed the trade at 16 ticks. We got 4 points. We got a total of 6 points on that trade. So let's go to the last trade. The last setup. Now the last setup is the toughest, and you don't have to take these trades at all. I just want you to know that. The pure counter trend trade is up to you. You're going to get so many great trend initiations and trend continuation trades that whether you want to take a counter trend trade is something that you have to decide. If you get them, they're great because you're getting them at the start of the trend. Let me find where I wrote it out. And we're going to send a PDF out to everybody in the room. Okay. Now on the counter trend trade, counter trend, the oscillator signal is a must. They're not on the continuation trades. They are on the trades initiating off the 50, and they are a must on the counter trend. The closer you are to overbought or oversold, the more likely you are to make the trade, to have a successful trade. The background, the dots, background bias, if it's absent, is better. But you can trade against background bias because it's the nature of the trade. You're trading against the trend. But if you trade against an area where the background bias is absent, you're more likely to get a winner. No, you cannot trade against the dots. If you're taking a short trade sitting above a green and you got green dots above, you're looking for trouble. This is what I did this morning. I took this trade short on a green dot, really dumb. I got blown out by a wick. I went right back in and I got 2 points. I got 11 ticks, but it was a bad trade. The color of the 50 is not important. The intermediate quant, like every trade, must be in your favor, and the 3-line must be in your favor. We cannot trade ever against the direction of order flow, stochastic, and momentum. So let's find a perfect counter trend trade. Now, I just want to use the range to show you the rationale behind a counter trend trade. And here it is right here. There is no indicator that can call a top. None. So we let the market call the top here. Then we let it come down and then pull back and then take the continuation if we've got all the information or all the data we need to show us that the continuation is likely. So we don't pull a trade off the top. We let it come off the top, look for the first retracement. It's still a counter trend trade. We're just not calling tops and not calling bottoms. And good luck to anyone who tries to do that. I did it today successfully only after the market went up 16 points. Let me see how far that was. I'll show it to you real quickly. It was still really risky, and I was not too happy. Oh my God, it went back up. Hold on a minute. Here, I didn't take this, but it went up 24 points. So I said to myself, you know what? I'm going to take this market short because it's got to pull back. And I got a full winner. I got 4.5 points on the move. It was like a kamikaze trade because look at, I mean, how many times do you ever get a 24-point straight move? I knew that there were sellers out there. I let this first candle go because you can't trade it. And I just took this, but it's really not an acceptable trade. But I just did it because after 24 points, I said to myself, there can't be any more buyers left. So let's look at a perfect continuation. I'll tell you, they work. And again, if they didn't, you would see them. Let me just find a real nice one here, and then we can look at all of them. Okay, now you can't take this trade because you've got the green dots. Can't trade you can't trade short if you got a green dot sitting above you and you see this trade right here. There's your oscillator signal, and it worked great, but that green dot censored the trade. It's too much against you on that trade to take it. Now, I'm not looking at any long trades, which I should, but see, these long trades are all we can't trade a bottom. Now, here's where you take the trade, right here. Now, these are the riskiest trades. And what we're doing is we're making this assessment. The market's coming up off a bottom. We let the market call the bottom. And we're calling this a pullback in price intra-candle. And it's kind of a confabulation because you don't need a pullback candle. You get the oscillator signal. There's no dot above you. You've got the intermediate quant. You've got the 3 line. And there's your counter trend trade. And that's a successful trade. It's about 2 points. It's not a killer, but they don't have to be. We'll find another one. You're going to see no 3 line. Here's your 3 line. And here's another trade. Now, what I got to do is pull back and see if we got the oscillator. Don't have the oscillator, we got no trade. And there it is. Now this might have been a loser right here. Because here's your oscillator on a counter trend. And it looks like you have the intermediate. And let's see if that goes 4. If it doesn't, it's our first loser. And I think we have a loser. Hold on a minute. Here it is. Yep, it goes 3 ticks. So there's our first loser. And if you're going to get a loser, it's going to be on a counter trend because they are without a doubt the toughest trades. Let's find another one. But they don't fail very often. There's the counter trend. This is the trade that I took today that I should not have. I should have waited for the retracement And then the continuation on the trade, I had the major, the intermediate, the 3-line, and look at that trade. It's 100 points. There's your trade. Let's find another one. It's right here. There's your trade. And down it goes. Now, there's your trade right here. I don't know if that makes it. It's going to be close. Nope, it's a loser. So you have to be careful. And I'm not going to tell you that these are the easiest trades to take. Like I said, one thing I want to point out on these trades, again, the farther away you are from the 50, the better the trades are. When you take them very tight to the 50, you're accruing a lot of risk. And I'm ending the last configuration on the toughest trade configuration. But let's take them when they've got some space. Now that's an entry, and we probably have the 3-line here, and that's a winner. But I want to take the trades I would look at. See, this is a nice trade, only you have the dot. Here's a nice trade, only you have the dot. We're getting overrun by dots here. Oh, I saw one. See, we can't take the long trade because you have the dots. Can't take this trade. You have the dots. It's too bad because that's a gigantic trade. So obviously this one is the most difficult. Can't take that trade. You have the dots. A lot of these trades are censored. Now here's your trade. It's your counter trend. Moves the market starts here, comes back, goes up. You have to take the oscillator, and there's your trade, and that's a full winner if you're brave enough to hold through the 50. Remember, these are discretionary trades. I would not take this trade. Sure, it's got a dot and it's too close to the 50. This is a nice trade. And down you go. Now, these are not trades you have to take. But I'm telling you, the vast majority of these trades actually do work, as long as you stay away from the dots. This is another trade. I don't have the 3-line on that. I don't want to. Here's a great trade. You have to be careful though. This is pretty tight to the 50. I'd be a little concerned about it. But you've got the intermediate, you've got the 3-line, you've got the move down. We're calling this the move up. There's your continuation, and that's a full winner. I mean, that's a 4-point trade. You can see the dot censor a lot of these trades. There's another one. Definitely a winner, maybe 5 or 6 ticks. Not a gigantic trade. Now, personally, in trading, I would there's not censored, no trade. Censored, no trade. It looks to me like the ones that are censored are the best trades, but we just can't take it. There's your trade, right here. Intermediate quant. Let the market call the bottom. Let the buyers come in. We're calling that a retracement. There's the oscillator signal. You're in 1 tick above. And look at that move. That's another full winner. I mean, every one of these trades are $400 in your hand. So you don't need very many trades in a given day to make 8 or 1200. I mean, if you're just trading 4 contracts. Here's another one, boom, and down, intermediate. So you got one heck of a lot of, there's another winner right here. Now, I don't know if you have the intermediate quant. Oh, you have a dot, no trade. There's a continuation long, but we're just talking about the counter trends here. No 3 line here. That's a dot. There's a dot. There's a dot. There's a dot. There's a dot. And you see here the dots are censoring all these trades. So here's where they help you. You saw before where they were hindering you. Well, forget whether you have the 3 line or not. We don't know before calibration, before we closed and opened, but you can't take a short trade on a green dot. So actually, you know what? There's not even an oscillator signal. Here's the save right here. And it works. Here's the save, and it works. Can't take a trade without the oscillator. The oscillator is not recalibrated. Those signals are, there's your trade off the bottom right here, and it's another winner. I'm telling you, these trades work. I've spent 1,000 hours looking at this. I mean, I'm sleeping like 4 hours a night going over this platform and watching it. Here, it's another winner. But you can't take it. You don't have the 3 line. You've got to have that intermediate quant. I'm sorry, the intermediate quant. Here, you don't have the 3 line. And you got to have the 3 line. And you can see how it's censoring a lot of losers. You have the dot. Can't take it. You have the dot. Here, you're looking for the continuation short. You're not looking for the reversal, because that dot is going to be present throughout this whole candle formation. As soon as this candle starts to form, you're going to get it. You're going to get the idea that that red dot is not going away. And even when it's 1 tick away from closing to the upside, and that red candle is still there. Also, the reason I make the oscillator more visible is so that we can anticipate an oscillator signal. Like the oscillator fires when it crosses this cyan line. So all I have to do is look down here, and I know there's no way I'm going to get an oscillator signal on that upclose. So I don't even have to bother to look at it. All I'm going to do is look for the continuation short if I have the 3 line. So it just, and there's your trade. Right there. We let the market call a top. Take this as a little bit of a retracement and look at that trade. I mean, these are gigantic trades. Now it's occurring against the direction of the multi-time frame trend, but like I said, it doesn't matter. It's a counter trend trade. So we know the trend is going to be against us. Here we can't take this short because of the dots, but man, it just cranks down. No trade here. No trade long. Can't take it. Okay, so I think I've gone over this as much as I possibly can. Those are our 3 trades. They're written out. We're going to transfer them to a PDF. They're very, very successful setups. Now, here's just what's going on in the market just now. There's your continuation long. Now, you have to have a little bit of chutzpah to take this trade long, because the candle doesn't break the 50. You need a 2/3 candle close. So if you took this candle long, you're okay. On this trade, I think when you're coming off the 50, I think you're all right. I like the fact when the candle body's like this. So if you took this long, you've got that incredible trade. You have no short trade because you don't have the intermediate quant. Not even a chance here. So you got no short trade. Long, this is a gimme long because it's got everything. And there you are at the top for a perfect trade. Now, you don't have an oscillator signal here. No short trade. You have a dot. You can't take it. There's your short trade. Counter trend. And it works. Then you've got this signal. You don't have a dot, so you can't go long. But look at these trades. You have this trade for, I don't know, 5 points plus. This trade for 6 points plus. This trade short, 1.5 points, 2 points. And you don't have this long trade. Oh, you do have, wait a minute. You do have an oscillator signal, but you don't have a dot. So you have no trade. So you have 1 trade, 2 trades, 3 trades, and you got like 8 points right here. So what else can I tell you? If you listen, if you really obey the rules, you're going to make a lot of money. And we would have made well over 1,000 today if I didn't take dumb trades. And I can't find that other really bad trade I took on the E-mini. But I took immense winners. Immense. I think I took that trade short. That's the trade. I took that trade short. That is the dumbest trade short of all time. I had a brief flash of 3 line on the intermediate. I had the 3 line, but I had no oscillator signal. It was really a poor trade. And it, I don't know, it cost $350. So you just take out that 1 trade, already we're up $700. That was a horrible trade. And I just want you to know that, you know, I wish I was faultless. Now, I just want you to know 2 things. Number 1, we're going to be automating the system. It's probably about 10 days away. We have to limit the number of traders who get it because we can't put 1 million people in at 1 tick level because it'll honestly, it'll cause problems. If you want to pre-order it, you can. Obviously, I know everyone's going to want to be careful, make sure that it makes money. And this, I think, is an essential tool to trade. I don't know if you've seen it. Here's the E-mini. This is the crude one. Hang on a second. And just for today, we're going to give a lifetime at half price. So it's normally $1,500. We're going to cut it right to $749. And let me just show you these tricks. The Renko candle moves quick when the market's in a fast market. And when you're here, all you've got to do is hit buy and up close. And you don't have to worry what that up close is. And I'm going to close it. And if you let's hit sell it down close. And I'll just show you it execute. Of course, it's never going to execute now that I'm trying to get it to execute. But this is a wonderful tool. Now, there's no trade here. We have no oscillator signal. We're sitting right on top of a dot that we're unlikely to get rid of. So there's no short trade here. And remember, this is a top. So we've got to let the market fall. You never take the first down candle in an uptrend. That's your short here. So this counter trend trade has to mature. But if you watch how the candle goes, and hopefully we'll get a pullback, we want your entry to be 46.50. And if you want to put it in on the dome, you can. But if you just sell, this is a slow market. But sometimes the market rockets. And I try to always call out the entries because we have this estimator, it's very accurate. So we know where the candle is going to close. I just wish it would go down. So you just see it execute. And then if there are any questions, we'll no matter what platform you trade, I would never trade without this. And I took a trade today, unfortunately, that was a loser on the E-mini that I took so fast on the range that nobody in the room got it. I was so happy. I didn't even call the trade. Here it goes. You're in. And you're in at the exact entry price, 50. No slippage. It really does a great job. Now, there's no trade. We have no oscillator. This is where, if you take a trade, you can wind up with getting a loser. There's our first target, 4 ticks. And here's our second target. How many ticks is that? It should be 2642. Now this is projected in our room all the time. There's the next Renko. And you don't have to do anything. It's all going to self-manage. The ATM is built into here, although we can build it into your dome. Got the target. The stop does not move. We give these trades a lot of room. Now, sometimes when I get down this far, I move the stop. So I don't want to take that much risk. Remember, the counter trend trades are the riskiest trades. For me, obviously they're the ones that have the most risk. So I don't have visions of getting a 16 tick trade, and you can see it's starting to push up a little bit. I don't want to give back everything. So what I would do is actually even tighten this up a little bit to lock in a little bit more profit. And then if I can get a down candle, I'm in great shape. But if I get an up candle, I don't give too much back. And usually on the counter trends, if you get an up candle, the market's likely to just roll. Let's just see if I can get it to go down one more, and you can see the stop pop for you. And normally our stop would still not be at break even. Here we go. There's the break even. Here we go. Now we've got +1 on our runner. And just because it's a counter trend, I'm going to move this a little bit further down. I don't care if it stops me out. Everybody in the room yells at me because I move these stops. But see, now this was not a counter trend trade. This is just a lucky winner. I just want you to see how the trade evolves. And you can close the trade here if you want, anytime you like. And you just manage it off a chart trader. And I do it in front of everyone. If you haven't been in the room, you know that we should all be at the same price, moving down the same. You should all have the same entry. If you just hit sell on a down close, everybody should be in at 50, at 0.50. Usually when I just put in random trades, they always lose. But you see, I'm just going to move my second target up. Let's move it to here. Let's move it to here. Let's get it out. See, and the trade's out. I was up 385. Now I'm up 645 on that trade. So I think the NDT is just a really wonderful tool for trading. Now there's your entry right here, and you have a winner with much less risk. It's right here. You let the trade find the top. Obviously, you're not going to make as much money, but you're going to enter the trade where the market's already declared itself to come off the top. So it's at a point and a quarter. You already have profit, but you have significantly less risk. You lost the dots. You lost the background bias. Well, you have the weaker background bias. You've locked in a winner, and it's up to you whether you want to tighten your stop, how you want to trade it, but you've definitely got yourself, you know, it's between a single and a double. But 4 ticks, you got 5, so everybody's filled and out on this trade. And there's your entry. There's a winner in real time, and that is an entry. That's a bona fide entry and a bona fide trading winner. So let me see if there are any other questions. Let me just move this back a little bit. I don't display it because it takes up too much space. So I just squeeze it like this and then cover it like that. So I can have, so it doesn't obliterate all of that stuff. I'm not going to worry about this now. So let me go back real quickly, review one more time, and then I'll see if there are any questions. And you can see that our rules are very good. There's no absolutes across the board because there's no trading entry that doesn't have some human discretion. Now, the auto trader won't. Now, let's take the easiest trade, which is the new trend. Oscillator signal absolute. And if you look here, the oscillator is a must. 3 ticks of the candle body off the 50, very, very helpful. Background bias in your direction. I'm not going to say a must, but boy, on the new trend, you really want it. Dots, not a must, but boy, I'll tell you again, you got them. You're really in good shape. Color of the 50, I thought initially was really important. Look at this trade. Just fired through a green 50. Not important. So that's an independent variable that just, if it has any throw weight, it has so little throw weight, it's irrelevant. The 3 line is a must on every trade, and you have to watch overbought, oversold. You can't sell an oversold trade or buy an overbought trade. The continuation trades, here's the only trade where the oscillator signal is rare. Again, you don't want to obviously take a continuation in an overbought or oversold market. Here's where the dots sort of replace the oscillator signal. They're a must. Oh, background bias is a must. The dots are a must. The color of the 50, again, is not important. And as always, the intermediate quant and the 3 line are a must. On the counter trend signals, oscillator is a must. It's best the further overbought or oversold you are, the better. But you can see on trades that aren't significantly overbought, I mean, I won't go back to the one. We just took a winner and the market wasn't significantly overbought. Background bias absent is better, but not a must. No dots, a must. Don't trade a short trade with green dots above. It means the NASDAQ and the Russell, listen, they're probably retracing too, but they're still got their trend intact. So as long as it's intact, you really have to stand aside. Color of the 50, not important. Intermediate quant. The quant must be with you, and the 3 line must be with you. So 6 and 7 are musts on every single trade. And if you have them with you, you're really going to be in good shape. Now, let's go. I'm going to just go really quickly to crude because it's the exact same rules, except you don't have the dots. So your trades have a little bit less authority, but I do want to review it briefly because people are going to want to trade it. And we're going to eventually have dots for the Russell, for the NASDAQ, and for the Dow. We don't have them yet. If you own the platform, you're going to get them automatically. We definitely would not charge you for them. And the signals are really just as good. Now, this is a continuation short. You don't have the dots to verify the trade. And remember, on a normal continuation, you don't need the oscillator. But on this continuation, unfortunately, you do. It's a little bit different. and there's your continuation trade. So you're going to need a little bit more up, but you know what? You don't need it. I'm going to take it back, but you'd like it. There's your continuation right here, down. This pink backbound bias is very helpful. And let's look at some more. There aren't any here. There's the continuation. You don't have the 3 line. There's a continuation long. 3 line calls it. Now, you do have the 3 line here. You'd like the quant, but you don't have to have it. But I'd certainly like it. That's not a continuation. Here's your continuation. It's up, back, and long. Now here's chop. No 3 line, no 3 line. See how this just blows chop away. You're looking for a short trade, but you can't take it. There's the 3 line, and you get a winner. There's the 3 line, and you get a winner. I'm telling you, it's just the way it is. There's no short trade here. 3 line is blue. Here's the 3 line, and you have a winner. Can't take this trade. 3 line doesn't align. No trade. No trade. But in all of this chop, you don't take one loser. And there's your bread and butter trade. Kaboom and down. That's really break it, take it to the bank. Now, if you had the 3 line, you'd have a continuation trade here. See how this censored, the 3 line censored the continuation trade? Kaboom, no trade. There's your continuation trade. There's your continuation trade. I'm telling you. Just unbelievable trades. Look at that trade. You can see all this green background bias. Up you go. I mean, it's a very, very easy platform to read. This is riskier because you're trading against a weak downtrend. You don't have the quant, but it's a tradable entry. You don't have to have the quant. Now, you'd like to trade in the direction of this multi-time frame trend. There's a beautiful short. Another beautiful short. We're off the chart. So, I mean, what can I tell you? You get great trades. You just have to trust the signals. That's all I can tell you. They will work for you and come through for you. So let me see if there are any questions. I actually gave this thing twice because I gave it in the other room once. So I'm a little bit hoarse. So the PDF will go out. You're gonna see it. But I'll tell you, there's not much to the rules. It's not like you're overblown. I mean, you have to have the 3 line on every trade, and you have to have the intermediate quant. And you don't care about the 50. And so it's simply whether you need an oscillator signal or you need a dot. The continuation trade on the E-mini. And let me just change this a little bit. The continuation trade on the E-mini oscillator is rare, but on crude, you have to have the oscillator because you have no dot. This is the only difference. CL must have oscillator. And again, if all these trades failed, you'd see the trade get run over. Nothing is repainting here or anything like that. And here's a short continuation trade right here. I don't know if you've got the intermediate quant, but it's a winner. It's a point. I mean, just these little moves. And let me tell you, we trade 4 contracts, and the money stacks up. So let me go down to questions. I'll leave this open. I'm just curious. By the E-mini, I'll just show you this real quickly. Look at the E-mini here. It's going crazy to the upside. I think it's going to close up nicely today. All right, let's go back to here, and let me see if we've got questions. Now, I would dare anybody else to show their platform like this and show every single entry that's possible in every configuration, in every kind of trade. Now, I'm not showing JPEGs and stuff like that. You're seeing the actual trades. The only disadvantage we have is that I changed that E-mini, is that I played with the charts. No, I don't think I played with, I'm not sure I played with the E-mini. I can't find my text anymore, but I'm just going to move to it quick, and then I'm going to answer questions. There it is. Okay, so there are the rules. Okay, let me see if let me look at the questions. Okay, I've got a bunch of them, and I want to answer them all. I know. I'm sorry, Eric. We're taking a long or a short trade on the ES Renko. What color would we like to see the quant lines? I know what to look for. The quant line, Eric. I think we really, Roy, we really did that in. On every single trade on the E-mini, you want the intermediate quant. If you've got and you can't have the major or the minor against you. So you've got yellow, red, yellow, you've got to trade for the quants. You're good to go. For the E-mini, so right now the E-mini is being ruled by the correlative markets in that intermediate quant. That's good enough. Anything else is just gravy. Now the crude quant is an if. It's right now it's moving slow. You can get great trades without it, but if you have it, it's better. If you have background bias, it's better, but it's not absolutely necessary. Remember, there's some traders, and it depends upon your strategy. Let's say you want to trade 10 contracts on crude. Just take it for instance, and your goal is $1,500. You have so many contracts at risk. You're only going to take the sweetest trades possible. You want a green background bias for a long. You want the quant. You want the oscillator. You don't want to take a counter trend trade. So you're going to wait for the perfect setup that has the lowest probability or has the lowest associated risk. Same thing on the E-mini. You're going to wait for the 3 line. You're going to wait for at least the intermediate. Maybe you're going to want the major. It helps, but it's not necessary. You're going to want background bias, and you're only going to trade off the 50 because those are the safest trades. But all those other trades I showed you work over and over and over again. I wouldn't have put them in here if they weren't winners. And let me tell you, I found a couple of losers, but I couldn't find more than 2 or 3. Okay, Paul. Hi, could you go over what we're looking for when we say oscillator signal? Okay. Another question I have is how do we handle the 3-line indicator during a live trade so we don't know whether all 3 colors? You know what, Paul? You don't have to worry about it. First of all, you just look at the candle outline. That's all. Now the candle outline on the 3-line is a gimme. So you don't even have to look at the 3-line. Just watch your candle outline. And listen, let me show you how the 3-line makes it easy for you. You've got a down candle giving you a green or blue, this is outlined in blue. And if you look at the indicator, this isn't it. But if you look at the 3-line, you can outline it in whatever color you want. I have it in sky blue and orange. So you got the heads up. If this down candle is giving you a blue halo, you know the up candle is. So you know you have it. The only question here is whether you want to take a continuation trade without the dot. And I would not do it. So you have no trade. So the 3-line's pretty easy. Look right here. You have a red outline on an up candle. So you know when the down candle comes, it's definitely going to be red. It's not going to change. If it's red on an up candle, you know it's not going to be green on a down candle. So there's your heads up, number one. And a lot of traders ask me about anticipating the oscillator signal. Now the oscillator usually Renkos usually are not that quick, but sometimes they fly. You just have to watch when the dots get close to the cyan line. And if you just keep tracking your head, and it's not hard. Like right now, I only trade 2 instruments. So when I see this blue, I know I'm not getting another blue until I get a red. So I don't have to worry. These are oversold signals. The down triangles that are blue are telling you you're above the 80 line, which you can remove if you want. So I know the only thing I can look for is a down. And all I have to do is wait for this to roll. And you should see it intra-candle. It is not hard to do that. And the only trade that I would knock myself over the head missing is a counter trend, because 2 ticks on the E-mini on a counter trend is a big deal. But if you're taking a trend trade or you're taking a continuation trade and you've got the dots and everything, if you miss that first entry, I don't think it's going to hurt you too bad to take the second one. I took the second one a couple of times today, and we still swept right through. So don't kill yourself over that first 2 ticks, although you would optimally like to get them, believe me. I mean, that's $25 a tick, a contract. There's no reason to leave it on the table. But anticipating this is not hard. Just takes a little screen time, and you'll get it. Okay. I hope that answered your question, Paul. Gordon, what we're going to do is we're going to recalibrate that MA diff. It's real simple. If you take this and you go from here and you move up, this is 12 points. We're too far here. About 6 points, and I may let it go 7. We have to see because we're still working on it. When you get, it's still too far. When price moves about 7 points above, maybe it's about here. This is 9. So when you're about 7 points above the 50 to the upside or 7 points below the 50 to the downside, you're overbought or oversold. Now you can still take a trade. You just know that you're accumulating a little bit more risk. That's all. And we're going to have the MA diff reformatted for Renko because there's no modified 15 here. So we cannot use the MA diff. And we don't want the modified 15 on this system. That's what I mean, Paul. I'm sorry, Gordon. Okay, good, Roy. Sure, oscillator, it's every time again it crosses the cyan line. See this dot? Look up here. There's your up signal. And what I did is I reformatted mine to make these purple dots big. And if you get our template, it'll do the same thing for you. I got rid of a lot of junk that was in here. Sergio had all this background color. I blew it out. I just made those purple dots bigger. I thickened the green line. But you see how this pullback handle just came back, so the dot hit the cyan line but didn't move through it? That's why there was no down. And that's why on the continuation, you have no up. And you need a dot for that continuation trade anyway. Now it worked, but on this continuation with no background bias, I want to see a dot. So that's how it works. I'll tell you, I never have trouble anticipating an oscillator signal. Just keep track of the last one you saw, and you'll know you will never get another blue. And the only thing you have to watch out for is a red, and you're only going to get it when you get a significant pullback. So start looking around here, and it'll save you looking through all these candles where it's just impossible to get. You can't get two blues in a row. An oscillator, I don't know what you mean, Gordon. What constitutes an oscillator question? That one I don't know, Gordon. You have to kind of rewrite that for me, because I don't understand that. Roy, if it's not showing background bias, just let us know and Sergio will fix it for you. Okay? You should have this indicator. I'll show it to you. It's called bias right here. RL bias. And actually, the right one is called RL cis bias. But this one is a beta version, so it's working the same. You don't have that in there, we'll just send you a new package. Okay, good, Michael. I'm glad you're back. Right, remember, D, the top three lines are the quant lines. The bottom three are the three line. And the bottom three lines, you don't even have to look at. Make like they don't even exist. In fact, you can take these lines and squash them, because the only thing that you care about is the color of the candle halo. That's all that matters. So really, the only thing you're really looking at is these top three lines. And the fact is, if you really are annoyed or you feel it's distracting, you can make the three line indicator colors. I haven't done it, but you can. You can make all these colors transparent. See, right now the default plot is yellow, but that's what determines the color. If you set these to transparent, you'll get no three line, but you'll still get the candle body outline because it's visualized here. So I'll show you real quickly. Let's move this to transparent. Move this to transparent. And all of a sudden, the platform's going to get a lot easier to assess, but you're not losing any data. Three line to transparent. Let me hit OK. They're gone. And look at what you can do is just squish it down. I mean, they're there. Move that up. And now you still have all the data that you had before. You're not losing anything because all that matters is the candle halo. And you don't have, and believe me, looking at the 3 line, all it's going to do is give you a headache. I never look at it. And you could just look at the candle halo. That makes it a lot easier, doesn't it, D? And then you focus on that intermediate quant. That's the key quant you want with you on every trade. If you have the major, it's better. If you have the minor, it's better. But you can't have these against you. And you're going to get winners on that intermediate. If they're bracketed, it's just, again, more icing on the cake. You see this reversal? Can't take it because of those dots. But look at the intermediate quant. Remember, the intermediate is not assessing price on your trading chart. This is looking at other markets, and they are sucking price down on our trading chart. Up, if we had the 3 line here, we don't. I'm sorry, we don't have the 3 line because you see the candle halo, it's black. Got the dot, we'd have a long trade and a winner. We don't have the 3 line, we'd have the long trade and a winner. So you don't need it. And that's even that makes the whole platform even easier to look at, D. Sure, Dave. Here's the list. Remember, you're going to get a copy of it, so don't worry about it. We're going to put it on a PDF and we'll send it to everyone in the room. And they're really excellent guidelines to taking a trade. If you follow them pretty religiously, you're going to sidestep almost every loser on the chart. And if you adhere to them, you're not going to get a trade and chop because the 3 line will not be in your favor. The intermediate quant will not be in your favor. There'll be a dot against you. Something is going to hold you up from taking that lousy trade. And that's what's really important. So although they stop you from taking some winners, they really, really do stop you from taking a lot of losers. Now, where did my text go? God almighty. Hold on. Now, there's no way it vanished just because I recalibrated. There it is. Okay? So on a new trend, oscillator signal is a must. You must be tight to the 50. Background bias, very helpful. The dots, super helpful, but you don't necessarily absolutely have to have. I don't want background bias or the dots to censor the trade. If you have them, though, they're great. Because too many of these work anyway, and very rarely you get a loser anyway. Color of the 50, forget about it. Forget about it. Intermediate quants, always a must. 3 lines, always a must. You don't buy an overbought market or sell an oversold. Counter trend trade, oscillator, a must. Again, you don't buy overbought, sell oversold. Background bias absent is better. No dots, a must. Can't trade against the dots. 60, not important. And again, intermediate quant, 3 line, a must. And going from the bottom, continuation trade, 3 line and intermediate, a must. 50, not important. Only difference here is dots, a must. Background bias, a must. No overbought, oversold. Oscillator is rare. On crude, you have to have the oscillator. And you're going to get all those. So don't worry about it. We'll set them out and send them out to you. And then when you go over the charts and you actually, at night or in the evening time or on a weekend, and you look at these rules, you're going to see that they're going to stop almost every loser. And they're going to get you into tons and tons of big trades. We're the first people that I have ever known to configure the direction of the NASDAQ and the Russell on dots on your E-mini chart. That's pretty, honestly, I'm not going to toot my horn, but that's pretty revolutionary, quite frankly. I mean, a multi-time frame analysis of the E-mini, I think you have to have. You have to do triple screening. That's an old rule of Alexander Elder, who I consider almost to be my mentor. I read all his books many, many, many years ago. But looking at other markets is pretty unusual. I don't know of another platform that does it. And boy, to trade the E-mini in the direction of the Russell and the NASDAQ is a killer. Again, it's going to stop you from taking some winners, but it's really going to prevent you from taking a loser, because it's pretty hard to walk into a loser when you've got, on a continuation, you want that background bias. So you're in 3 multi-time frame trends: the E-mini, the Russell, and the NASDAQ. And this dark dot is the strongest color. So the chances of you getting a loser here are possible, but very, very unlikely. It's okay. Dots on the continuation trade, yes. On a continuation trade, like, you've got to have the dots red. It doesn't matter what color. Now you see, here's the continuation signal, the oscillator, but you don't have the dots. You got to have the dots. You don't have to have the oscillator. Here you have it, but you don't have the 3 line, and it fails. Now, I did say that on a continuation trade, you can get in 1 candle late. Like right here, you have no entry. You don't have a dot. If the dot hits 1 candle later, and you'll see it intra-candle, believe me, it's not going to kill you. Grab it, hit that close on a down close, or sell on a down close, and you're going to get the trade. It's likely going to work. This is your, I swear, honestly, this is the trade. If you can trade 10 or 20 contracts, this is the trade. You don't need the dot. You need the oscillator signal off the 50. You must have the intermediate quant, and you must have the 3 line. We don't have a 3 line anymore, but we know the candle is encircled in orange. This is, I'm telling you, I mean, if you get 2 or 3, if you get 5 or 6 of those a week and trade 10 or 20 contracts, you're going to make a freaking fortune. I am not kidding you. I have never seen a lower risk entry than that on any chart, on any system in the known universe. The only thing that can make it better is if you had pink background bias, which is why you're chasing this a little bit. You've got a multi-time frame downtrend on the Russell, on the E-mini as well. So you add all that up, you're probably going to make those 2 ticks up. And this turns out to be a gigantic trade. Now, that was a potential counter trend, but you can't take it because it's of the dot. So I hope you're getting a better feel for the system. It takes some screen time. I mean, you're not going to pick it up right away, but if you're in the room, I'm calling these trades. And sometimes, like today, I called 2 horrible trades. If you can trade better than me, you're just going to ignore them and trade over my shoulder. And a lot of people in the room made more money than me. A lot of people did. And they just ignored my bad trades and took my good ones. Good question, Brian. Stops and targets. I can show them to you actually right now. Let me go to the right edge on the E-mini, and I'll show them to you. Because when we hit a trade, they're going to project. So let me bring up the dome. Here's the E-mini. Let's sell it down close. Hopefully it'll hit soon. You know what? I'm just gonna close this, and I'm just gonna sell. Okay, so the stop on this trade, the entry is 25, 52.25. Our stop is 54. So we're 7 ticks. That's our stop. Our first target is 4. And I think our second target is 16 or 4 points. Now, once we get to 7, the trade is trailed by 7 all the way. We want to keep the 7 ticks away, all the way. Now just stopped out. That doesn't matter. So that's what it is. Initial entry, and we'll send this to you on the same PDF. It's a 7-tick stop, 7-tick trailer. First target 4 ticks, second target 16 ticks. And we got that 16 ticks a few times. Crude, it's 8 ticks. 8-tick stop, trails by 8. First target 5 ticks. Second target is 30 ticks. That's the, and I'll show you the ATM. All I got to do is just move this to crude. Crude. And we'll sell.
Order pending. Order filled.
We're filled. First target's 5. Second target is 30. Well, this isn't 30. I might have the wrong ATM, but it's 30, and this is 8 ticks. So that's our ATM. I'll just close the trade. Now we program that into either your DOM, if you want to trade the DOM, or the NDT if you want to trade the NDT. Either one. Now what's nice about the NDT is I have 3 NDTs. I have 1 for my crude. I have 1 for my E-mini Renko. And I have 1 for my E-mini range, which I don't take many trades off of anymore. It's just, I have to, if I reload the chart, the dots will come back to the appropriate color. Well, I'm not going to bother. So you can also do that with the DOM. You can have 3 domes. I don't know where the dome is, but it's around here somewhere. You can set up 3 domes, to trade each individual instrument. Now you see on these trades here, you see something here? No, that's it. Okay. Let me see if there are any other questions. It's recorded. Chris, I'm going over all different days. Yesterday, 2 days ago, 3 days ago, today, I showed you the trades. I showed you everything. Your exits, Phil, are determined by your automated trade management strategy. On this trade right here, I'm famous for peddling for getting too conservative and moving my stop, but there's your entry right here. If you just left this trade alone, you would have gotten 6 1/4. Actually, you wouldn't. You see this wick? It would have taken you out of the trade. And that's what so what you have to do is just be. So what's going to happen is you're going to go in, you're going to get 1 3/4. This huge wick is going to take you out. But if you're quick enough, you're going to just re-enter here. This is all you need for a re-entry. You definitely don't need an oscillator signal because you're in the same trend. You just need the dots. You need the intermediate quant. which you have, and the major and the minor, and you're in on the same candle that took you out. And you're back in. And that comports with our rules. So it does cost you a tick, because now you got to get in here, but then you got the big move for 3.5 for 10 ticks. So if you just let it run and don't touch it, every time I go in and meddle with the trade, I swear to you, I make the trade 1,000 times worse. In the last month, I've cost myself more money by tightening stops and tightening trailing stops than anything possible. Sometimes like almost $1,000 in a week, I've cost the room by meddling with the stop. Just leave it alone is my recommendation. Let it evolve, and I think it's the best way to go. That's going to determine your targets. They're already programmed in. Everything's just execute the trade and just let it go. I think it's your best bet. The signal oscillator is just, it's what's different about it is it's based, it's expanding my knowledge base. I don't like exponential formulas because I think that these are all first order. Stock, futures, and Forex move in a first order way. They don't move in a second order manner. That's why I hate exponential moving averages. But we played with an exponential oscillator, and that's really its magic. It's doing the calculation on an exponential basis. And that's what's making it so accurate. So, I can't argue with success. It's giving you terrific entries. And I'll tell you, I was almost like thinking of just taking every oscillator signal, because if you actually look at the number of trades that you would win and lose, it's almost 80% winners and 20% losers. But in balance, you really have to actually trade. You have to have a little more. But so many oscillator signals work. What you're really looking for is the confirmation of that oscillator signal. And every time we get one, you're looking to take it, either as a continuation trade or as a reversal trade. If you get it on a continuation, you don't need it, but it's great. Remember, once the trend starts, you're unlikely to get another oscillator. But on a reversal, you want it. On a trend beginning, you want it. And they just really give you great signals. And the thing is, when you trade at top here, once you get this oscillator signal here, it costs you points, but you just rarely get run over. Whereas if you trade right off the top, if you don't let the top confirm itself and let the oscillator cross here, it leads to a lot more losers. So this is the place to take the trade. You're going to make less money, but you're going to accrue less losers. And look at this trade. Like, I would never take this entry because it's right into the 50. And you don't want to trade right into support. But it smacks right into it and just crushes it through. So, what can I say? And remember, this background bias is green. You're trading the strongest uptrend. And that's allowable in our rules. Now the E-mini is pushing up, with the NASDAQ's going hard to the upside. I'm recording this. No, D. Listen, you know me. I'm just scaling the trade from entry to maximum excursion. We're never going to get that whole trade. Never. And I want to make that perfectly clear. If this goes 4 points, you're not going to get 4 points on the trade. You know that. What I do is I just do this to give you an idea of the size of the trade. If you want to know exactly how far this would go, if you didn't touch it, you would get in here, you get 4 ticks on your first, and then it would take you out. The candle is 5, you're on a 6-tick trail, it would take you out right here on the reversal. So you would get 1.75 and you would get 4. So in total, you would have 7, 8, 9, 10. You'd have 11 ticks. So you'd make 11 times 12.5. That would be your trade if you didn't touch it. So I do want to make that absolutely clear. You don't get the full trade unless it takes you out at 4 points. Then you're out of the trade. Okay, you reload, Saxman. I reloaded my system. I have all but the dot. You know what, Saxman? Maybe you don't have the indicator. Take a look at the indicator in the indicators and see that you have this indicator. It's called the RL.sys. If you don't have that, you didn't get it. And we'll just let us know and we'll send you an updated package. That's all. So don't worry about it. If you don't have the dots, now don't put that indicator on another market. You have to put it on the E-mini. I'm not even sure it'll work on another market, but it might, and it will just dysfunction. But if you don't have it, it's because maybe you didn't get it. We don't have dots on Forex yet, Phil. The only market we have the dots are on the E-mini because it's correlating with the multi-time frame assessment of the NASDAQ and the Russell. We're going to slowly build those dots out from the E-mini to the NASDAQ to the Russell to crude to all of the other markets. That's a very difficult indicator to do. Sergio's going to build them all. You just got to give us time, and we will get those Forex dots. Okay, Brian, it's funny you point out the 3 line when I just got rid of it. But here's the 3 line right here. It's right here. You see it says 3 line indicator, V2. It's these 3 lines. But again, these are not important lines. It's simply the outline of the candle. And if you want to change it, all you have to do is go into the 3 line indicator. Oh, this is the wrong one here. Hold on. Here's the 3 line, and you can change the outline. I mean, I'll show you. I'll just show you. I'll just do it real quickly. I'll change this to green, to forest green, and I'll change this to red. Now, it's not going to work because some of the candles are like this, but here's orange red. And then all you have to do is watch the candle outline. Watch. See? Now, you see, it's not working as well, but you see how they're outlined in red, in green, dark green? Or they're out. Now, unfortunately, the candles are red, so you can't see the outline very well. But on an up candle, you can see that red. That's all the information you need to see. That's it. Looking at the 3 line provides you with no more information. I'll just show you something really quickly, so I know it is running late. And this is why the candle halo is more important than the 3 line. Here's where the MACDs of the higher time frames cross the signal line. But you'll notice, let me find it. Here, so the MACD, the 2 higher time frame MACDs cross the signal line here when the 3 line goes green. But here, the MACDs on the higher time frame are heading up, up, up. And they're accelerating away from the signal line, although they haven't crossed it yet. So we let the candle halo, we provide it with more information. How do you get both pieces of data? Well, if the higher time frame MACDs are accelerating to the upside, the candle's outlined in green. And you see it's outlined in green before the actual momentum line turns green. So it's better not even to look at this. If you only want to trade a MACD crossover, look how late it comes. Remember, these are higher time frame MACDs. So their crossover is going to come very late. So we just eliminated the crossover and trade the direction of momentum, and it gives us a great signal. And here's where the momentum of the MACDs are heading to the downside. And we get the crossover here, and it's not more powerful. As long as you got the two higher time frame MACDs moving in tandem to the downside or the upside, you've got yourself momentum in your direction. The MACD crossing of the signal line, I don't think matters that much. So that's why you have it. So the best thing to do is just look at the candle halo outline. And I'm telling you, it will always steer you in the direction you should trade. That's why of all the different kinds of trades we have, you never counter trend trade the 3 line, and you never counter trend trade the intermediate quant on the E-mini. You can trade a yellow quant on the on crude, but you can't counter trend trade a green. And you know what? I should probably put that on the list, because that's one additional piece of information. Because I want to make it as comprehensive as possible. Let me put that in. And I hope I'm going through all. I want to try to make it as comprehensive as possible, so you can make a really good assessment of risk on the trade. And listen, that's the most important thing, and it's not only the most important thing, it's the only thing that matters. So it's very simple. You can take a long trade on crude on a yellow or a green, and a short trade on crude or yellow or a red for the quant. The quant is slow in turning, and it's just the way the market is now. And as long as it's not rocking against you, you're fine. And here it is. And on crude oil, for the continuation trade, and both of these, right here, quant in your favor. For crude, we'll make that 7, and we'll make this 8. On a continuation trade, quant, yellow, red, short, yellow, green, long. And let me just copy this, and I'll copy and paste it so I don't have to rewrite it for the others. Okay, and for the new trend, it's the same. It's the same thing. It's right here. This is the new trend. Yellow, red, short, yellow, green, long. 3 line must have to have the 3 line. Cannot be overbought or oversold. Everything else is the same. I have to put crude oil here, CL. And let me put crude oil here. And after a while, this is all going to become just really, really second nature. And the counter trend trade, you want the same thing. You don't want to trade against the color of the quant. It can be yellow. It can be, and I deleted the other one, which is a mistake. I'm sorry, but I just want to make this comprehensive. I don't want to keep you guys here forever. What I'm gonna do is put that in and just repaste this here. I'll fix it. Don't worry about it. I'm not going to do it now. I'm going to fix all three of these, and you'll get these on a PDF. I don't want to take up any more of your time, and I'll get them all set up. You know what, Chris? You know what, Chris? Tomorrow, there's no market, so I'm going to have a lot of the day free. So why don't you call around? If you call the office between 1 and 1:30, I'll work with you on it, and let me set you up and get you going on the Forex. Okay, Chris? Because I've used it on the Forex. It works real well, but I will set you up. The inputs for the Renko are different, and let me configure the Forex for you. So call anytime after 1:30, and I will take care of it for you, okay? Let me see, Ron. Yep. Let's take a look. Now be careful of that intermediate, because it's now yellow. You want that intermediate to be green. And now you see how nimble you have to be? Now what you have is a counter trend trade. Short. There's your winner. There's your entry. We're looking at live. I was a live winner. That you had to be pretty nimble, because that could have gone in either direction. But the 3 line is what did it, and you got a 1.5 on the trade. Obviously not a huge winner. Just hang on for 1 second. I'm sorry. Okay. Okay, well, I have to go in 5 minutes, but what it is, it's simply the excursion from the 50 up. This distance can only be, now we may make it 7. I'm gonna wait for our date over the weekend, points. If the market has moved more than 4 points off, 7 points off the 50, it's overbought, and your anticipation is not for any more long trades. If it's moved more than 7 points down off the 50, you can't take any more short trades, because the market's oversold. And I'll show you, we have the same thing here. on the right edge of the range. If you take a look at this, do you see this, these hash marks? That hash mark, we want the MA diff to be 13 or less. This is 13 ticks, always. And if you look at the bottom, this is 13 ticks. That's our overbought, oversold, and that's what we're going to have. Hash marks like this. Only there, I don't know if it's going to be 6 or 7. They're going to hover 6 or 7 points above below the 50, but it's just on the right edge because the 50 is always moving. I don't want to leave a static line here all over the place. And that's the only place that it matters. So that's the overbought, oversold indicator. If you wanted to see when the 3 line was all in the same, but Brian, you do get that from the candle halo. That's enough. Like right here, that's telling you all you need to know. And it's actually projecting better data than looking at the 3 line. Getting that first line green is not necessary. And if you wait for that first line to turn green, you're going to lose a million trades because the MACD lines are with you on the trade. The candle halo tells you they just haven't crossed the signal line yet. And that's not going to happen on the higher time frames for a while. So just trade the candle outline. Now look at this trade. Now it would have stopped us out on this wick. And I think it would have taken a lot of guts, personally, to go back in. But because it was the next candle, I think, yeah, that's the only place we could have gotten stopped out, I think. No, how did we didn't get stopped out. This thing is still going down. I don't think it stopped us. I don't know. I wasn't watching it. It could have stopped us out intra-candle. Without a wick, it cannot stop you out. There was no stop out here. We didn't hit a first target. So that's the move. It's all the way to the bound. It's a full winner. You know, Brian, we can't, but we can work on it for you in the future. I know what you want. We don't have it just quite yet, but we can do it. I don't know, Eric. I have to sit down with Sergio and Rory. If you own the system, if you own the software, the price for the automated is going to be very, very reduced. If you don't have the system, it's going to be much more. I just tell you that. I mean, it's probably going to be about 50% off if you already have the software platform. You know what, Frank? You should use it. And we have a manual. Just send an email to Rory, and he will show you he will send you the manual. The manual I wrote for the NDT is terrific. It'll show you absolutely everything that you need. No problem, Ken. Hopefully, D, I got that for you. I hope. Again, D, hopefully I clarified that for you. I hope I clarified it for you. I got that question, Brian. And let me tell you, in the future, we'll work on it. You have to install a new background bias, Patrick. The background bias you had before will not work. This is a completely different background bias. Remember, this is using the 2 higher fib numbers. 2 higher fib numbers. Fib numbers are not working that great here. And we're working on the higher fibs. We're working on the higher times ourselves. So you're going to need, it's going to have to say RL bias sys. The SYS tells you that it's configured for the E-mini Renko. So you will need a different bias indicator. Eric, the automated system is simply going to take the perfect entries. Perfect entries. We're going to set it so it only takes trades with 3 ticks of candle body off the 50. It's going to only trade green background bias. It's only going to trade pink short background bias. But it's going to trade a lot of markets. We're going to have it on the E-mini, gold, crude. The NASDAQ trades really good on a higher Renko. I think we can put it on the 6E. So that background bias, we're only going to trade the best one. And I think it's going to get a couple of trades on every market every day because they set up over and over and over again. So that's really how we're going to work it. On these continuation trades, we're going to mandate the dots. It's simply what we program into the algo. But that algo is going to be loose enough so that it's going to take lots of trades. I would take this trade right here. I mean, this is an automated trade. John, just let us know. Send us an email. Rory or Sergio will send you the package. Let me see what I did with those dots. See, yeah, I did. You know what I'll do? I'll take a screenshot. It took me a long time to figure out these colors, and I'll have that sent out too. Let me hit print screen. Let me just do this really quickly so I don't lose it. Here's the settings of the color. I'm just going to select it and crop it and save it. So this will go out too. So you'll have all the colors. Let me just put this on my desktop and I'll put it in as 111. So it's done. So now you'll get the colors. Okay. Let's see. Thank you, D. Yeah, listen, it's been reloaded. Don't even worry. If you have not opened or closed, your colors are good and mine are not. Remember, every fractal indicator changes color when you hit F5 or do anything. Don't worry about them. It is recorded, Paul. Hang on one second here. The room has frozen. Hopefully you can still hear me, but I'm getting a. Okay, here we go. Uh-oh.